Hello everyone, I'm Karmer, and today we're going to walk through one of my templates that I provided in the Discord, the 1-minute CVD template. So let's get to it. What we have here. So on your right side, this is the daily volume profile. Okay. Here, these extended lines, these are untested value area high and value area low levels. Okay. And if we zoom out further, we might even see an untested point of control. Okay, what does this mean? The untested point of control is a good area for a bounce, and so is this untested value area low, and so is this one over here, right? So by using order flow and big trades, and with the assistance of CVD, we can have more confluences, right? So let's go through this. Today, in this day at least, we opened, you can see this profile over here, we've opened inside the previous day's fair value. So I'm expecting either a breakout or a bounce. I'm not sure yet, okay? But looking at the current profile, this looks like a range profile, okay? So the only thing I'll be doing is I'm going to see interaction between buyers and sellers on the value area high and value area low, and I will stay away from this. We can see when market opens, huge pressure from the buyers to push up. However, the sellers absorb them, right? In this situation, this was too quick for me to do anything, right? So we're just going to be patient and we're just going to wait a little bit more. This yellow line represents a VWAP, by the way. And here we have a sell imbalance. A lot of people will try to say, if we break above this, I'm going to go long. However, I'm not a fan of going longs at value area high. I prefer to take longs at value area low and shorts at value area high, considering the fact that we open inside this fair value range. You can see here, one of the other charts that we have has sent an alert saying that there's a pressure level. We'll talk about that chart in the next video. So if you were to trade in this chop over here, you'd be in trouble. We are now approaching the value area high, and let's see the interaction. So what you'll notice here, this green line over here, this is valley, okay, also known as low volume nodes. Price will tend to have a reaction at those levels. We also have another area here where delta is present. Buyers stepping in, buyers coming in, they're getting strong, but we are hitting a sensitive level. So now you can look here, look at the delta. If you measure this tool, right, the highest delta from this whole profile is this guy over here. So now I can do one of two things. I can put a sell limit order here and put my stops at the high here, or I can wait for a closure. Let's see, if we retrace and close below, we'll look for a short. Okay, we're tapping in the seller's area. Now notice we tap into the zone where sellers are present and buyers also got absorbed in this level. If we close here below the 66 and 67 and we are at the value area high, we'll look for a short. Look at that, 88 contracts coming in. CVD's showing good pressure. Who's going to win this battle? So what we have here, sellers came in. Buyers try to push the price back up, no result. Buyers try to step back in, no result. Destroyed by the sellers here at the value area high. And look at the delta over here. Huge delta, huge delta. I will take a short.
Order filled. Order submitted.
Since the buyers got absorbed here, so sellers should push it back down. So what's going on here? Why did we bounce from here? You can notice here, 71 buyers. Reload. If we break below this sell imbalance, we can expect for price to go lower. There it is, the VP hit. Conclusion. The way we can use this chart, right, is just simply looking at value area high and value area low. Reward and absorption of the interaction between buyers and sellers. And CVD to guide us along the way as well. What we can see here is that here until here, you have a divergence on CVD. If you were trying to go long here and you saw this, it's probably a good idea to close your position, right? Because you can see as soon as we did the divergence, the price went down. Luckily in this case, if your stop loss was all the way down here, you would have been fine. When we reached the value area high and we saw this absorption of the buyers, reward of the sellers, and reward of the sellers, absorption of the buyers, we can take a short position all the way down to the POC. Alright guys, this is another example of the 1 minute chart. So you can see price now, it's about to hit key level. Notice how the CVD looks a little bit off. Do you spot that? Here we have a divergence. CVD is pointing up, price is pointing down. The plan is to go long, but not yet. Let's see if these buy imbalances can hold price. Also notice it's 10:57, right? 2 minutes left before the next hour candle open. Okay, you can see that we're hitting this valley area. Okay, absorption of the sellers, buyers taking control. But until we break this, I'm not interested in a long. Alright, so the other chart has told me we have a pressure level. Also, what can we see here? Another divergence. So if we draw this low to this low, and you look at this low to this low, it's slightly pointing upwards. So here's your second confluence. Buyers stepping in. We have a buy imbalance. We closed above these sell orders. We close above this high. Where can I potentially look to take my long? We have this cluster of the sellers. We have this imbalance. And we have this cluster of orders. 150 orders coming in. Let's take a buy. And where can I put my stop loss? Underneath the sell imbalance. So we have two protection levels. The buy imbalance and these big trades, right? So should be safer. We can see that price already closed above this level. So let's see if we can break above this area here. We can see aggressive participation, buyers here, right? So now I know that this level is broken. The buyers are here. This area here becomes protection. Now if we break above this, buyers stepping in, not rewarded. Either you close your position here or you keep holding. Until we break this area here, we're still safe. I do want to see a little bit more aggression before I move it to break even. And we'll see how this kind of closes. Buyers were able to protect that level. There. This is a bullish move. 106 buy orders at the bottom wick of this candle and a buy imbalance. Where can we see the first rejection area from this move upwards? Here, it is buy imbalance, and over here. Now I can go to break even. And there you have it. So let's resume. Price was going down. We were able to identify an area using the valley of the previous day's session profile. Then we had one divergence and two divergence. And also notice how the POC, the point of control, we were above here initially and we shifted downwards. Huge aggression of the buyers going up, closing above these buy orders, going up, going up, going up. And then look at this one. That's a lot of buyers coming in. Aggressive, 150 contracts at the bottom part of the bullish candle, and then more big trades inside the body. So price got accepted. As price went on, sellers stepped in, absorbed. Buyers tried to push, they got absorbed. And then what happens? When the sellers try to push down, the buyers reloaded their orders, giving you this very bullish signature where you have deep trades at the bottom wick and a buy imbalance. Hope you enjoyed this video. If you have any more questions regarding the 1 minute chart, please don't hesitate to DM me and we can go through it together.